Hey traders, happy Fun Day Monday. This is Ron. Hope you guys are doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. Start off here with the SPY, losing 0.2% today. Like I talked about in yesterday's video, we broke through some moving averages, tried to get back above them, and what happened? Rejected, and we're failing. Today we gapped lower, finished with basically a doji pretty close to where we opened, losing 0.2%. Target, the big one, the 200-day institutional moving average at 275. That's where I want to set my alerts. We take a look at the Qs. They took it on that chin today, losing $3 or 1.69%. If I zoom in here again, break down the moving averages, back up, retest, and we roll over. Main target, 200-day moving average, which ballpark is basically 174. That's where I'd want to put some alerts. Now the Qs took it on the chin. You know, there's still the news out there with China, and that'll eventually resolve itself, but it's not, helping tech stocks, especially semis right now. The SMH, which we look at from time to time, down nearly 4%. Look where I call it T-boning, right off the 200-day moving average. We hit the 200-day back in March. We broke through it in February, dipped below it, but closed above it. And then we basically went up to 120. Now we're back down. It's all been given back. You can see the big volume here. If a 200-day is closed below, not traded below, but closed below, I have to zoom out because that puts this range somewhere in the upper 80s to around 90 as the target, basically 10% lower. You take a look at some individual stocks like XLNX. This was a huge seasonal play that we did. We talked about in January, earnings gap up, and then it just went bonkers. If I remember correctly, this was over a 500+% win if you go from here to here. I mean, it was just extraordinary. And then when the seasonality ends, look what happens. Earnings gap down, we bear flag, and now all of a sudden we're back down into the 90s. My, oh my, right? From 140 to 190, or to basically $100. If the 200-day moving average is broken, just go to the earnings gap up at 90, which at that point would be only 5% lower. We take a look at Micron. This one has rolled over too. Target back down towards the December lows, even a big one like Intel. Again, earnings, even with the trade war or whatever is causing it to go lower, right? Loss went from 58 to 43. A protective put could have been in place for earnings. That's why I talk about this so much. And that's with you this entire time. There's been no bounce. There's nothing that's breaking major moving averages here. It's just straight down. Well, now we're at multi-month support. And if I go back 5 years on Intel, if we take out, you could even say like 41-ish, that's bad news. Then you start coming down into the 30s. Now there is a 200-day period moving average coming up here too, but it just shows you how quickly this has declined. Now for these stocks that are getting just obliterated, allegedly according to the trade war, they can get that all back if things normalize. So just keep an eye on anything that is selling off due to the China situation. Now, if I go back to XLNX, remember we talked about XLNX in January from a seasonality perspective and how I said get ready, it jumps, no shock, and then it just keeps going, right? Amazing, easy, so easy to follow. Well, here we go. This is what I'm going to do. The summer is coming, and typically the S&P goes nowhere fast. This is the S&P, and basically between now and August, it goes nowhere, 0.4% gain. It only does that 57% of the time, meaning it's flat. It doesn't do much at all. When they say sell in May and go away, they like to instill fear and say the market sells off. From a probability perspective, using all the recorded history, that's not the case. This is the same thing I told you guys last year. It sort of goes nowhere. So knowing which stocks are set to soar, knowing the hottest proven winners for the upcoming months, I think can be the difference between a so-so year again or an amazing year. You guys keep hearing me do these webinars. I can spotlight, I can show you, I can serve them up on a silver platter, the hottest stocks for the weeks ahead based on their own historical data as our secret weapon. So I'm going to do a webinar this Thursday, just a couple days. I just put it together this afternoon. It's going to be at noon Eastern, 9 a.m. Pacific. You can register at the bottom of the video. If I've sent you an email, you can register in that email as well. This is the type of thing we're going to be looking for. We're going to be looking for stocks no one's paying attention to, and magically they start ripping higher out of nowhere. You can even see when stocks start to pull back and they re-energize their bullish trend. This treasure map, if you will, this roadmap for how stocks historically trade is priceless. I'm going to share it with you guys for free in Thursday's webinar, noon Eastern this Thursday. Let me pop up my little calendar here. It's the 23rd. Now here's the thing. I have one event on that 23rd. There's not a double. We have 500 seats. We're going to hit max capacity. So please register ASAP, and I look forward to seeing you in that event. All right. 2 other stocks really quick. I forgot to mention, here is Apple. It's also getting hit with the alleged China trade war and also got downgraded today. So pretty much ballpark 170 now is the target, going back to that gap fill in early March. And then BIDU, this one's also getting beaten up. Everything seems to be trade war right now, but they also had earnings and it was not pretty. I'm going to take you back 5 years on BIDU, and we're at 5-year lows where we stand right now. If we do all the data on BIDU, the next major support zone, 80s, 90s, right now if we were to close near these lows. So bad news for BIDU. But watch when this stuff turns. These things are going to probably, I'm going to guess, make massive bullish engulfing patterns, or they're going to gap higher, close near the highs of the day. If we see that happening on a spike in volume and the news is positive with the trade war being resolved, it's going to help some companies and hurt others. So there's this give and take, like I said in the other video. So when the turn comes, it's probably going to be a violent one. All right, so I look forward to seeing you in maybe Thursday's event. I'll send you all home with the top 10 hottest stocks for the summer. Wish you all the best, and I'll see you in the next video.